Welcome investors to the 40 Finance channel. Today I'm going to talk about why I bought Zillow stock. This is literally one that I just purchased this week. I've been watching Zillow stock for a couple years now. So for the first time in a long time, Zillow stock dropped under $100. And that was kind of like my little area where I said, you know, if I see it go under 100, I'm going to take a closer look. That opportunity has come up here recently. So in this video, I'll share why I decided to buy Zillow, compare it to the opportunity that I would say the popular opportunity that exists in Redfin, and where I think the stock will land heading into 2022. All right, the first thing to know about Zillow from a bull case perspective is their goal. Their goal is the complete digitization of the real estate world. So they have a 3 or 5 year plan that's basically like Zillow 2.0 that they've already started. And the concept is for the average home owner is that everything you need to do with real estate is inside the Zillow app, right? So whether it is understanding your home's value, connecting with a traditional real estate agent, selling your home to Zillow, buying a home through Zillow, using Zillow for even mortgages and title services, all those things are in the plans. The biggest ones that exist now is sort of the Zillow Premier Agent, which allows you to connect with the real estate agent, and the Zillow Offers, which is actually the buying and selling of homes via Zillow. So some of this stuff has a long way to go. It's just in the very small stages. I would say that the goal of digitization is probably a decade away, if not more. It's going to take time for the real estate industry to change. But like a lot of things over COVID, there's a significant snowball effect that we saw with Zillow. Now, the big foundational block that Zillow has compared to other competitors is they truly do own real estate on the internet and through the app by a significant portion. So if you read through their investor reports, you're going to see that they're always talking about web traffic, time on site, things like that. Some of that stuff is comparable to a traditional internet stock model, but they've also introduced here with Zillow 2.0 some of the other services. So if you're a bull, you believe that the other services, aka Zillow Offers, the mortgage unit, all those things can start to build upon each other over the next several years. They're already driving incremental success every year with the Premier Agent, which again is almost like an advertising model. But the biggest thing is that they've captured the data from millions and millions and millions of users and homes throughout their time period. And in my opinion, that gives them an edge, much like a Google or Amazon or any of these other big data players that are out there. Now, on the bear side, can they take this foundational element that I just described and turn it into much more revenue than they're seeing today? Zillow is already starting to nudge into profitability. They have an EPS on a non-GAAP basis, and that is expected to grow over time. The bigger win, though, for them is really on the revenue side, but part of the big growth in their revenue is the sale of homes, which they actually paid for. So revenue numbers are going to explode on the top line. The interesting thing will be, can it keep translating into the bottom line at scale? So we don't really know that answer yet. I don't think anyone does. But the current pace of profiting about $20,000 for each Zillow Offers home does give you a glimpse at the potential for the future. Then, of course, you just have to build up volume and obviously try to increase that margin as time goes on. Now, the other thing on the bear side of this stock is, like so many others, it is not cheap technically. I think Morningstar has a fair valuation of around $75. It has trended as high as almost $200. We'll take a look at the metrics here in just a second. So even me waiting for it to get under $100, I wouldn't say that was the drop dead bottom for Zillow. Certainly in a stronger market correction, we could see the price go down even more. And that's why for me, this is definitely a long-term stock buy. And I'm perfectly fine with that because it fits well in my portfolio in terms of my interests in internet, in e-commerce, as well as services that I already use. Now, when you hear about Zillow stock, you're also going to hear a lot of folks talk about competition, and Redfin is probably the buzz term or the buzz competitor right now. There's a lot of internet traction for Redfin right now, and with good reason. Redfin has been off to a very strong start, but it's important to understand where the two stocks differ. Redfin is essentially changing the real estate agent model, right? They are not trying to change the real estate industry as a whole or the complete process of listing, buying, selling a house. That's what Zillow's trying to do. Zillow is going after the entire segment, right? Whereas Redfin is actually targeting sort of the real estate agent model of getting paid on commission and trying to save money for buyers and sellers while offering the benefits and conveniences of the internet. So from my standpoint, Zillow and Redfin, you can compare them on a stock basis, but you should know that your bull case for Redfin should probably be a little bit different than the bull case I would have with Zillow, and it's more about changing an entire industry / segment versus changing the real estate agent model. That's more what Redfin's focused on. All right, let's take a look at the metrics for Zillow stock, and I'll share where I think this one will land heading into 2022. All right, taking a look at the technicals, and there's not a ton on here that would suggest, hey, I need to drop what I'm doing and get in Zillow stock, because frankly, since the February high of about $200, it's been a downward slide ever since. Today we're at 95. You got an RSI of 35. But from my perspective, this is a good time to buy Zillow, mostly because some of this overinflation of the stock price that we've seen in the market a lot is starting to come out. In fact, if we go to this time last year on August 20th, the stock came in at about $82. Now you're seeing it at 95. I basically, missed the roller coaster, but now things are coming back down. And again, Morningstar fair value is about 75. So we're even inching towards that, which is frankly hard to do when it comes to internet stocks. All right, from a historical valuation perspective, which I often look at to see where a stock was trading in the past from a valuation standpoint, there's not a ton here. Zillow's just now dipping into non-GAAP EPS, so we can't really get into these forward PE numbers in the past because frankly, they've changed their business model in the past year or two. But we can look at price to sales today at 6. You go back in history, and I guess it's middle of the ground, but even price to sales assumes some of that new revenue from the home buying unit, which is not a direct indicator of profits for them because you can sell, say, $3 million houses and really pad your top line. So it's an interesting one from a valuation perspective. All right, so with the popularity of Redfin and even Opendoor and some of those things, I put together this Seeking Alpha comparison chart on valuations. And if we look at things like non-GAAP PEs, you can see how Zillow's expected to trend. Redfin, obviously, they are still early in their cycle. There's no non-GAAP EPS projected for them yet. If we do go down to price to sales, which I would say, again, it's a little bit of a fuzzy number, but you got 563 on the trailing 12 months for Zillow. Redfin comes in a little lower at 3.85. Opendoor is the lowest at 2.11. These business models, though, are significantly different, so that's what you have to keep in mind. Now, let's say you wanted to look ahead on forward EV to EBITDA numbers. Zillow at a 37 times, Redfin at 700 times. I would say that Zillow has the advantage there. Price to book, depending on how you value assets, Zillow's in at a 4, Redfin's at 14 times. Now you start to look at revenue growth going forward. Zillow plus 52%, Redfin projected at plus 45%. And then the 3-year puts Zillow at about plus 50, Redfin at plus 40. EBITDA growth going forward, 156% for Zillow, not applicable for Redfin. And then even scrolling down to some profitability metrics like profit margin, Zillow has the advantage. EBITDA margin, Zillow has the advantage. Return on capital. I mean, there's just a lot of things right now because Redfin is so young that Zillow is already established in. And that's just one of the reasons why I chose Zillow over Redfin. Both of these stocks, when you think about year-to-date price performance, minus 31% for Zillow, which is good news if I'm buying for the long term. But Redfin isn't exactly tearing it up either. They're at minus 33% year-to-date. And on the short interest side, we've got Zillow around 1%. I don't know how fresh that data is. Redfin is in the double digits at 12+%. All right, let's take a look at some of the analyst projections so we can get into a price projection for next year. This year, fiscal period ending December of 2021, these are non-GAAP numbers. $1.19, which is huge growth from the year before, puts a non-GAAP forward PE at 78. If they hit $1.42 next year, or if this target goes up, you would have a year-over-year EPS growth of about 20%. Then things start to snowball a little bit better in the out years heading into 2025. Scrolling down to revenue or price to sales, if they hit this year at $6.6 billion, that would be about 100% growth. Forward price to sales at $359. December of 2022, so this would be the one that I'm targeting, plus 50% growth projected. 2.41 on price to sales. The closer you get to 1 or under, the better. And if we look in an out year, we don't have as much data, but you can see that you'd be inching closer to that target of a 1. All right, let's stop by TipRanks and see what the best performing analysts are thinking for Zillow. We have several updates from the past few weeks here. Let me try to adjust it in. And you've got 1 hold and 1 sell in that mix. The price targets looks like anywhere from about 200 to 115. It offers 20 to call it 40 or 50% upside. These targets are supposed to be for a 1-year outlook, so basically August of next year. Now we'll look into my price projection where I'm just sharing where I think the stock will land as we head into 2022 after they close the fiscal year and do their earnings report somewhere in the neighborhood of January or February. Okay, so I'm buying ticker symbol ZG. That's a little bit different than just the Z. Quite honestly, they trade almost in tandem. ZG's got like a slight uptick over Z. But the reason that I bought ZG instead of ticker symbol Z is not for the shareholder voting rights, which I would, very unlikely I would participate in that. But I noticed that most Wall Street analysts, the big boys, so to speak, follow ZG a little bit more. So I decided to go with that so I can get the best information going forward with this stock. Today's price is about $95. EPS non-GAAP projection for the end of this year is $1.21. We just looked at that. That gives you a forward PE of 78 and revenue of $6.5 billion gets you forward price of sales of $359. I'm going to say that when they release their earnings in January or February of 2022, analysts for the next fiscal year will eventually raise this non-GAAP projection to $1.50. It will lower the price to earnings to 65. Revenue projection is going to be right about $10 billion. Forward price to sales in the neighborhood of 3. So those metrics coming down just a little bit. And honestly, on the price, I'm going to go on the lower side and say 110. But it wouldn't surprise me if it ended up in the 120s. The big uncertainty right now in this world, of course, is where the housing market goes. Same struggle I have with Rocket stock. A lot of the 110 to you saw as high as 200 on TipRanks. A lot of that is determined by where the housing market lands. I think house buying activity is going to continue to be strong for the next many years, based on population data of millennials, etc. We're in a weird time right now because we're coming to the end of low interest rates. You've heard the stories about bidding wars and whatever. You've heard the stories about people leaving metropolitan areas. That to me is kind of noise on the outside. I think house buying remains strong. And so me saying $110 for Zillow doesn't imply a huge upside through January. But again, for me on this one, it's a much longer term outlook. Ultimately, I'm very happy that I was able to get into Zillow stock under $100. I wasn't sure if I'd ever see that price again. And I'll be super honest, we could wake up someday in a broader market correction and see it even lower than today's price of 95. And the way I've set this up is I'm just tiering in some buys over the next month or two to get my position, and then I'll probably just hold for a little while and see how the real estate market develops. All right, guys, let me know what you think of Zillow stock, or Redfin for that matter, if you've compared the two, and which bull case you feel the strongest about. Love to hear your perspective in the comments. As always, please give the video a like, subscribe to the channel. Thank you very much for your support. We'll see you on the next video.